All right. Hello, hello. This is Abel Pacheco, your host for the Five Talents podcast. We are super excited today because we're talking about how to build wealth like the 1%. And we have Mr. Israel Linares with us. He's with CoStar, one of those market analysts, the senior guys that knows the data inside and out, what drives some of the factors in it. And he's going to talk a little bit about and tell us a little bit about what he's seen. So we're super pumped. It's nice to have an expert in the field and somebody to help us along the way. So, Israel, thanks for joining, man.
Thanks so much, Abel. Appreciate the invite.
Yeah, we appreciate you coming out. I know it's a busy time over there at the Linares household. You got a newborn at the house?
Yeah, that's right. We just had a baby girl 1 month ago. It's been a journey, but she is such a treasure. Feeling just so grateful to have her. And yeah, so she's doing well. Mom's doing well, and just we're learning about each other.
That's your first one?
Yeah.
Oh man, yeah, steep learning curve, bro. Forget about the data and all these trends. That's the steepest learning curve right there. You're gonna feel a lot like you don't know what to do, and you know what the fact is you don't, but you'll make it happen, man. So will absolutely make it happen. Well, dude, that's that's awesome. Praise God, and congratulate you and your wife on your new addition. So I'm excited for you guys.
Thank you so much.
Yes, sir. Well, so Israel, I learned a little bit about you when we spoke at the real estate development the real estate development news in Austin. And man, I was excited to hear a little bit about what you're doing. And you hosted an amazing panel and gave some good insights for investors and developers and people doing deals like myself. So I'm appreciative that you would come out, but maybe in your own words, tell us who you are and what you do, and we'll just start a great conversation, man. So tell us a little bit about yourself.
Yeah, absolutely. So like you said, I'm the senior market analyst at CoStar. I pretty much cover the commercial real estate market for Austin. And my focus is on industrial, office, retail, and multifamily property types. So for any subscribers of CoStar out there, you may be familiar with the market reports, so articles that come out. So I'm contributing to those, reports and collaterals that help go out and provide insight into the market. So I've been in the industry for about 5 years. I'm fairly new to CoStar, but before CoStar, I was at CBRE, the world's largest commercial real estate brokerage firm.
Small guys.
So I was with their research team within there. So focusing primarily on office and industrial. So my job there was really just about supporting sales team, providing, knowledge, insights, data that really gave them the artillery when they're out in the field, talking to clients and making sure that they had the best intel possible. But going back to my roots, really, I'm a data analyst by trade. And so my whole career has been based in analytics and looking at data. And so that's kind of where I hang my hat. I started my career at Six Financial. So I didn't start in commercial real estate. Six Financial is basically financial data provider. Similar to Bloomberg, a lot of real-time pricing. So I'm very familiar with sort of the ins and outs of research and data and digging into that data. So I really just find a lot of passion in being able to take complex or raw data and be able to transform that into, ways that are visually appealing, ways that make it accessible to a broad audience in really easy to consume ways.
Yeah, that sounds great, man. What a background indeed. So the word analyst means different things to different industries, right? So maybe you can describe in our area. So you've been a financial analyst, a market analyst, senior analyst. Now you're working at CoStar, one of the most trusted sources for data in our world as we're doing, commercial real estate. But what does an analyst do? Let's take a step back for a moment, because I want everyone, as we talk about some of these data points, I want them to understand like this, Israel is the guy. So what does an analyst do?
Yeah, so I'll just take a step back real quick and kind of just talk about CoStar's ecosystem. And for those maybe who aren't subscribers, who don't really know, kind of what CoStar is all about or what we do. So obviously CoStar is sort of the most prominent, well-known, well-reputable sort of data provider for commercial real estate. And, the team really consists of a huge operation of data collection. So there's a lot of not only manual work, but sort of automated work to be able to scrape information, collect it all, making sure that it's clean, that it's accurate, comprehensive, timely, and putting all that into a database, and tracking as many data points as possible to make sure that people know what's happening in the market. From as an analyst at CoStar, my role is to kind of take that information, interpret that, and be able to produce outputs that really kind of tell the story of Austin, tell the story of what's really happening, and what are some of the trends that we're seeing, and then what are some of the things that are impacting those trends. So yeah, like I said, basically looking at data, taking that raw information, trying to transform it into something that people can understand.
Yeah, right on, man. That's awesome. Thanks for sharing the background. And at CoStar, when Israel says one of the most trusted sources of data, it kind of ends up being, in the commercial real estate world at least, one of the default most trusted third-party data sources that we use a lot and just highly trust, because it has all of the timely, the most important, some of the best factors, and it's just allows us to easily summarize this one deal that we're looking at, 150 pages of this submarket data. Who are comps? What are the rents? What are the growth? Market data, population, median income, all these data points that I use to make assumptions in underwriting. So that's what CoStar allows us, to end up, utilizing. So that works out really well. And Israel, being an analyst, kind of helps look at that data and tries to figure out what's driving it. So from our perspective, when we say he's the guy, where it's like, hey man, one of those trusted individuals to say, okay, what data points should we be looking at right now, and we're making our next investment, right? And Israel, I know you cover like more than just multifamily. You cover office, industrial, retail as well. So you've got a big purview around your area. But let me ask, I guess, the question, which is, what kind of data points are you normally regularly looking at? What maybe cover some of these data points? I want to make sure I don't miss anything here.
Yeah, absolutely. So there's these data points are usually encompassing of the different property types. They usually impact them in similar ways. So obviously, for as a measure of demand, we try to keep our finger on the pulse of like what are people leasing, and one of the best measures for that is obviously leasing activity, but net absorption too. So we're looking at net move-ins versus move-outs, and we're tracking vacancy, rents, both on a unit basis and per square foot basis. Obviously, we're tracking inventory growth. So all the properties that hit the construction pipeline, we want to make sure we're capturing all of that. We have an amazing team of field researchers that are basically also on the phone, but also out on the field, taking pictures, going out into the sites and seeing how they're doing. So it's a really comprehensive process to be able to accurately track, what's getting built. And then we also have an amazing team that tracks sales. So making sure that we're capturing every property that's trading hands. And obviously with, the state of Texas non-disclosure laws, sometimes pricing can get a little non-transparent. But the team does a really good job of trying to, procure as much of that pricing data as well. So we're trying to kind of capture supply, demand, but also, vacancy, rents, and sales trends as well.
Yeah. Great. Yeah. I love that. When I was younger in high school and college, I'm kind of going through my finance classes. I'm trying to follow supply and demand curves as the basic ones. And now as an investor, I go, oh yeah, when supply goes down and demand goes up, price is going to follow demand. I'm like, that's the one. And if supply goes up, demand, starts to go down. Like, if price is going to follow. Make sure I'm aware of those. And sometimes as we're purchasing properties, we're kind of figuring out that you got to look at the forward picture, the development pipeline Israel mentioned. So what's being developed, what permits are out, and just having somebody to go out to the property and the land, to see, hey, are they really getting started? Is it going to be delivered in, 2023 or 24, or no, nowhere near it. So those are all cool. And then, Texas is a non-disclosure state, right? So we don't have to give out our sales price, or we're trying not to. The tax guy always finds out. But how do you guys get those sales comps? How does that happen? Is there an army of people on the phone calling all of us owners, or what happens?
I don't have the specific sort of methodology for how they get it. I think it comes through a variety of channels. There's not like one single way, but I do think that they try to procure it directly, and try other different avenues of disclosure. But I couldn't tell you specifically, like, exactly.
I fielded a call. It's like, hey, are you the owner of this? How much is that worth? I was like, oh, I guess that's one of the ways they do it. Is take a call. But anyways, well, man, that's awesome. So all of these metrics mean something very different to a deal that we're in, because we're as an investor, I'm pulling all of the timely data around all of these points that we're discussing: demand, net absorption, vacancy, leasing activity, rents, the organic rent growth, the value add rent growth. I'm looking at competitors and what they're doing. So that's how we formulate a pro forma, our projection, right? So the better you can do that with more timely data, the more accurate you're going to be. And, we're trying to do our best to do that. So Israel, why don't you tell us a little bit about, some of the data points, some of the recent data points that you're seeing. Let's just start with demand. What the heck is happening in Texas and Austin and San Antonio? And, what's happening to demand? How's it looking, and where's it coming from?
Yeah, absolutely. So, like I said, my focus is primarily in Austin, so I'll try to keep it there because that's kind of my core competency.
Sure.
But
Absolutely.
I'm happy to talk a little bit more.
No, absolutely, man. Go for it.
But when I talk about demand, I think it's important to talk about it on the backdrop of what happened in 2021. 2021 was an extraordinary year for demand. So kind of a quick recap. We'll walk through this sort of timeline so we can see, in order to know where we are, kind of know where we came from, kind of thing. So, basically, coming out of the pandemic into 2021, remote work was just all over the place. People had tons of flexibility. The world was flush with cash. There was all kinds of, government distributions. The labor market was extremely tight. And so there was a wage growth, tremendous wage growth for employees. So it really shifted in their favor. So people had more money, they had flexibility in where they could work, and all of that kind of contributed to flexibility. So people didn't necessarily have to live within 2 or 3 miles of where they work. They could, maybe move from San Francisco where they were paying, $3,000 in rent, and they could, have significant reduction and still be able to maintain their job and move to maybe more affordable Sunbelt. So, not only for, Austin was a beneficiary of that for a lot, but a lot of these Sunbelt cities where they could maintain kind of their standard of life. They could have sort of that entertainment and that, that city life without those sort of expensive metro prices. And so we saw a lot of demand coming in, a lot of domestic migration into Austin. And that translated into one of the biggest, annual net absorption that the market has seen in its history. So
one of the largest annual net absorption, meaning net positive migration to Austin, and finally taking up some of the units available, right?
Exactly.
Or whatever.
Yeah, just so I'm sure your audience is really well educated on this, but just net absorption for us, and just to define it from a CoStar perspective, basically the net absorption is just a net change between move-ins less move-outs, and so when you have a positive, that means that more space was occupied than it was in the previous year. So at the end of 2021, we had an annual net absorption of about 20,000 units. That means 20,000 more units were occupied compared to the previous year. And that was one of the highest ever. So now, moving forward, coming out of 2021, we've kind of seen that normalize. So, we're starting to see that kind of the economy is kind of cooling down. We saw inflation sort of skyrocket as a result. So people were getting paid a lot more. There was just a lot of money floating around in the system. And so that kind of brought about some reaction from the Federal Reserve to basically address some of these inflationary issues. And that's kind of helped cool the economy a little bit. And so in 2022, we've seen demand kind of rebound to its historical average. So last year's annual net absorption was around 8,500 units, which is still really strong for this market. Mm-hmm. But obviously, when you're comparing against such an extraordinary net level, it's like it doesn't sound as good, but it is very good.
Still very healthy, right?
Yeah, absolutely.
Okay, gotcha. So that net absorption. Okay, so that's what kind of brought us to today. And how do you see Austin performing right now in terms of the same demand, same net absorption, and what does that mean for us?
Yeah, so I think looking forward, CoStar does a pretty good job of being able to take a lot of sort of data points, economic data points, and historical trends, and kind of try to make a prediction on where that demand will land. Our current forecasts kind of show that absorption should stay strong, but we could see a decline through the end of next year, and that's really as a result of broader economic risks of recession that we're seeing in the news a lot. And we're already seeing a lot of companies kind of pull back on costs. They're kind of pulling back on hiring, and even in some cases, like actually, laying off employees. And so that's kind of creating a little bit of a burden on rental demand. But overall, net absorption, the expectation is that it'll still remain in the positive territory. I think it just won't be at the same level that we've seen, at the beginning of 2022 or even 2021.
Sure. Yeah, it makes sense.
Yeah.
And so that's the demand, right? What about the supply in your area? How's that looking?
Yeah, so that is such a standout kind of metric that we've been tracking. The under construction pipeline is probably the busiest that it's ever been in this market, and it actually is one of the top, most active markets in the country. So there's about 35,000 units under construction. And that's about 13% of the market's inventory. So Wow. When you look at, it's massive. And when you look at it on sort of nominal units under construction, that's about the fourth highest. That's the fourth highest in the country. And then when you look at it as a share of inventory, that's the second highest among major markets. So there's been a lot of optimism on the long-term vision and growth of Austin, and developers have really voted with their dollars and have broken ground on a lot of space. And a lot of that's really, I think, what really serves Austin is that there's just a lot of room to grow. And so we've seen a lot of growth in the suburban areas, places like Georgetown and far north Austin, as well as on the southern side, Buda and Kyle. Some of these municipalities just have a little bit easier process for permitting compared to the city of Austin, which, within the urban core sees a lot of delays in terms of the permitting, just because they're so overwhelmed with just the vast amount of construction happening, not just multifamily, but, across all property types. And so, when you have a lower barrier to entry, maybe less friction, as well as, expanding population in these suburban areas, that makes it all the more appealing to be able to build. And so, so it is, it's on fire right now. So just to give you a sense, Q3, we had an annual net absorption of 15,000 units. So roughly that many have been added over the last 12 months, which is tremendous. And that's actually also one of the highest rates in the country.
Wow. Yeah. And you mentioned number 4, and what are some of those other markets? I don't know if off the top of your head, if you know all of them, or some of them, what are some of those top ones that are building like crazy, like Austin?
Yeah, so for under construction, when we look, I think the best way to compare apples to apples, we usually use as a share of inventory, just because obviously New York City is like nothing compared to like a Phoenix, but as a share of inventory, Nashville is on the top of the list. Miami, Raleigh, Orlando are kind of the top 5, and Austin's at number 2 there.
There you go.
Yeah,
Nash Vegas is how I've heard it described.
Yeah.
But wow, that's awesome. Okay, so that gives us a picture, that we're looking for: supply, demand, and then existing inventory. So we're talking about, when you were talking about the development, new doors, new units, new things that are being built, what about the existing? How's that factor into the supply and demand there?
Yeah, so I mean, we have seen that inventory expand. So I think the latest stat is like over the last year, inventory has grown by about 7%, and a lot of that's kind of contributed from those suburban markets I was talking about. So those markets like Georgetown, the Northeast, far North Austin, that's been kind of the biggest drivers of that growth.
Austin, Georgetown looks crazy when I drive go through there. Is that where Elon is? Tesla as well?
Tesla, so
or north, right?
Tesla is, so it's actually considered more east. Just east of downtown. If people know like our submarket boundaries, you would probably consider the far northeast. Northeast, and and so I also want to point out that Taylor that's kind of where we consider far north Austin, and that's the site of Samsung's sort of 6 million square foot semiconductor fabrication plant. So you're looking at a town that was 17,000 people. In the next decade or two, that is going to just expand massively. And so that's also, a big driver of some of that multifamily development that we're seeing out there.
Yeah. I drove by Tesla finally, and it happened to be that it was still dark. And to see that place like lit up, one thing is during the day, it's massive. But at night, you see the whole thing is like glass and the lights on the inside, and you can see everything going on in there. It's crazy. I had the opportunity to visit Samsung when I went. They used to be a client of mine, and we served them. I went to Korea, so I went to South Korea and got to visit them. And their campus is just massive. It's a small city for sure. And as you're saying that, I go, oh, it's a small. Taylor is gonna blow up over the years, especially with the amount of jobs and just everything being built around them. So that's awesome. It's awesome.
Yeah, absolutely.
Well, cool. So thanks for giving us a little bit of window, to maybe the future as well as what's happened in the past. So you're looking at the data points, not only in multifamily, you're looking at them in those other areas like we talked about, right? So in office, industrial, retail, maybe how does that all factor into like multifamily investors, right? Because we don't operate in a vacuum. We're all working together, so to speak, in the commercial world. So maybe you can give us your purview on, the whole, everything going on and that may affect us in Austin there.
Yeah, so absolutely. So, the story of Austin has really been about tremendous growth, and that's in terms of population, and that's been in terms of, jobs coming to this area. So obviously we're just talking about Tesla. That's had huge implications on the industrial market. You have one of the most innovative companies actually manufacturing onshore in the United States and in Austin. I think that's had tremendous implications. So, just talking about industrial, we're already seeing a lot more, suppliers and vendors of these, a major company like Tesla coming into the market as well. So that brings more jobs, that brings well-paying jobs. Companies like CellLink, which is, a electric circuit maker, they opened a factory in Georgetown. They're going to hire 2,000 people over the next 10 years. And so that brings a lot of promise in terms of, well-paying jobs. And I think that sort of makes that connection into that multifamily story of demand, and why we expect to see, even despite sort of the headwinds we're seeing with the recession looming in the next year or so in 2023, that the trajectory that Austin is on in the long term is really in a good place. And same for retail. Retail's really been really benefited from this strong population growth. And they also have one of the biggest construction pipelines in the country, and I think that's really correlated to a lot of the growth that we've seen in terms of rooftops and headcount. So the retail market seems to be doing well. People have, right now at least, seem to be still spending money, still have good savings, still have employment's really strong right now still, and so people have that income to go spend, use that discretionary income. I think the only kind of big question mark that we're seeing in the commercial real estate market, at least for the four that we're talking about, is office. We're already seeing some kind of pullback from companies, being very cautious with how they're spending money and their expenses. And that usually comes in the form of, hiring freezes or reducing headcounts. One of the other sort of, other collateral damages is office leases. And so, being able to get out of those long-term obligations and maybe save some money, maybe move to remote work, has put some pressure on the office market. So we're already seeing vacancies increase. Sublease availabilities or sublease listings have gone up significantly. So I actually just looked at this the other day. Just over the last year, they've gone up about 65%, and they've reached the highest level they've been ever in this market. So,
sublease listings. I'm leasing. I'm in a contract, and I'm trying to turn it over to somebody else, right?
Exactly. Yeah, they're trying to get out of their obligation, and the easiest way to do that, you can't really just cancel a lease. That it just doesn't go well. So the easiest way is to just market it out to someone else who might be interested in that space. And usually it's all built out. Maybe it's got all the finishes, is ready to move in, and it usually comes at a lower rate than a direct rate. So that provides a little more incentive for folks companies out there maybe looking to expand their operation. Maybe their business is doing well, and that makes it all much easier. So, so office has got some headwinds ahead of it, but white collar job growth has been really strong in Austin. Since 2020, that's expanded by about 20%.
Wow.
Over the last 2.5 years. And
how's that measured? White collar job growth, is that? How's it measured?
Yeah, so the BLS, categorizes jobs. They use information, professional services, financial activities. And so when you kind of aggregate, kind of group those together, you can kind of use that as a proxy or gauge for office using employment. Those are usually, lawyers and advisors and, et cetera. So that's kind of our best way of being able to gauge that.
Boils down to office space, right? For those employers, and they're like, man, if that's growing well, but some people are moving to work remotely, not in the office, it's like a plus and a minus. It's a pro and a con, right? Good.
Yeah, absolutely. I think
growth, but not need for office. Like, yeah.
Yeah, exactly. That's exactly right. So yeah, even if you have an expanding headcount, maybe you don't need that extra square footage. It doesn't correlate 1-to-1 like it used
Yeah.
to, just because you have less people in the office at any point in time.
Yeah. There you go. Well, man, all the different factors to think about. And as people ask, you for your expertise and for your guidance on, what you're seeing in trends, maybe talk to us about some of the future trends that you guys are expecting based on everything that's happening right now with the market, man. What future trends are you projecting out over there in Austin for the next, 6 months, a year? What do you expect there?
Yeah, so I think what's so foundational to, not just multifamily, but really just, across the market, has really been the story of Austin's attraction for domestic migration and for people moving in here. The last few years, Austin was growing at a rate of, 2.5-3% per year, which was remarkable, when you compare against a lot of other cities. That's cooled down significantly. That's down to about 1.8% as of this year, which is still really high, just not as high as it was. And current projections really keep it at around that same level. So, if that holds true, assuming, there's a lot of ifs here, like, we've seen that, maybe remote work kind of goes away, or maybe it fades away a little bit. Maybe people have to move back to where they came from. Or maybe they find that Austin maybe doesn't have the cost of living, maybe it just gets a little too expensive compared to maybe other Texas metros. And so there are some sort of risks associated with that, but that could sort of negate some of that positive growth that I was talking about. But overall, the expectation is that population will continue to grow at that really strong rate. And that will really buoy a lot of demand that we see on the retail side, multifamily side, and even industrial side. When you talk about, warehousing of goods and production of goods and getting those things out, like an Amazon warehouse, something like that. So all that continues to expand in lockstep with that growth in population. And then the other factor is job growth. These two are just the pillars of what fuels these success in these property types. And so it's almost like every day I'm hearing a new story about a new company that's moving to Austin, that's opening up a factory, or opening up a warehouse, or establishing a new regional headquarters. And so if that trend continues, and my personal view is probably likely to continue, that will be a really good story for Austin's future. Yeah.
Well, come on. We're all rooting for continued success. So we have a few properties there, and then I own some properties in San Antonio as well. So we're south of it, and we go, man, if it continues doing well, a lot of it's going to spill over. And we like the I-35 corridor, and we like everything from Shirts, Cibolo, all the way up through San Marcos, New Braunfels, and then we like the Buda story, Kyle, and then all the way up, man. So let's keep going. That's what we're looking for. The next DFW right here, Austin, San Antonio Metro.
Man, totally. Those are fast growing areas, and the I-35 corridor. They're seeing a lot of growth in the industrial sector just because of that access through I-35. It also gives access to the two main metros, and so you have population growth moving in lockstep with businesses moving down there, and then you have retail growing. So you have this virtuous cycle of expansions in that area, and so I think that really serves many of the multifamily investors in that area. Yeah,
we have properties in McAllen also, and so it kind of goes all the way from south all the way up the 35, where some people say, "Oh, San Antonio to Austin," but down south all the way from the 35, there is that big pipeline, so to speak, and you're fueled by the U.S. Mexico-Canada agreement, USMCA, which defines billions of dollars of trade between Mexico, Canada, and the U.S. And so a lot of it starts and keeps going up south. So starts south and keeps going up north. So we like that whole corridor all the way up and down. But anyways, that's awesome, man. It's good to hear the insights from you. And as we make assumptions on our pro formas for multifamily, we're plugging in certain numbers. I'm saying, hey, organic rent growth is 3, 4, 5%. We're doing value add rent growth. We think we can get X percentage premium over the classic units. We're talking about expense growth and saying traditionally we've kept it at 3. Now inflation, we're maybe moving up to 4 or 5% year over year expense growth. We're looking at taxes continuing to increase, insurance, everything is increasing to make sure these deals work, along with now our debt, loan to value going down and interest rates going up, right? So you have all these factors that are kind of coming together. What advice do you have for multifamily investors in Austin on some of these assumptions we should be making in our pro formas? How do you view some of those numbers, and what would your advice be to them?
Yeah. So, well, I just want to quick disclaimer before I jump into that. I don't want to, as a representative of CoStar, not here to offer investment advice or anything like that.
Good disclaimer. Good disclaimer.
That's my disclaimer. All I can speak to is the data and, what the data is telling me. I would say that, something that we're noticing, in the data is that, going back to that pipeline that we were talking about, that expanding inventory, it is kind of putting some, creating a little bit of risk in terms of rent growth and pushing those some of those rates that we were used to seeing, the last couple of years. We kind of expect to see that compressed a little bit. Just speaking on a sort of broad metro-wide, level. So it's creating some of those immediate pressures in the short term. I think the expectation is that over the long term, those should recover. But with the wave of new supplies coming in, new doors coming to the market, that's just going to add a little bit of pressure on that and raising vacancies. But yeah, so it seems like this environment that we're in terms of rising interest rates, that's really kind of put a damper on some of those investments, at least right now. We're already seeing kind of those sales volume kind of diminish, the second half of the year. And so so I think it's just some things to, be aware of and tracking, something that we're following closely.
Yeah. Do you have data points on expense growths or expense comps and things like that?
Yeah. So CoStar does have that data. I think it's one of those things where it's just one of those data points that's just a little bit hard to really get enough of to make an informed decision. So you really need a lot of observations out in the market to make a really good, analysis of it. I don't think we just have that quite there yet. Yeah.
Got it. That's good insight. And then, one of the questions I think some people would be mad if I didn't ask: cap rates. What the heck is going on? You see comps and data points. What are some of the current cap rates? Maybe some of this is probably data driven. Some of it's probably anecdotal that you're hearing in the market. What things are being offered, what things are trading at. What kind of cap rates are you seeing right now?
Yes.
Any one of these. Speak to any and all of the areas that you look at.
Yeah. So, if we look at multifamily, we've seen cap rates compress, over the last year. Over the sort of last few years. Currently, they're measuring about 4.3%, and that's expected to increase over the next year, just slightly. I think that's a reflection of some of the downward pressures maybe we're seeing on pricing and our property values. And that's just, a consequence of what we're seeing in terms of, rising interest rates and some of these economic pressures. I don't have the other cap rates in front of me for the other property markets, but, I think what we can say is overall, I think kind of we're seeing, that story, that economic story impact on those property valuations.
Right on.
Yeah,
So
yeah.
for those that don't understand the cap rate side of it, so the lower the cap rate, the higher the price. The higher the cap rate, the lower the price. And so some of that pressure that we're seeing is like, hey, what were things being traded for 6 months ago, 2 years ago, a year ago, 6 months ago, and then leading up to today. And then we're like trying to put our fingers up in the air and gauge the wind a little bit and say, what is it going to be like in the future? Right. So, obviously Israel doesn't have a crystal ball, even though he's got some good data points on him. So we just appreciate your mindset and your insight, Israel. It's good to hear, man. It's good to hear.
Yeah, of course. Yeah.
If somebody wants to reach out to you or get in touch with, you guys, CoStar, or whatever, what's the best place for them to reach out to if they want to go, utilize CoStar, get some data points? What's the route? How do people get in touch?
Yeah, so I would say email is probably the best way to reach me. If they're CoStar subscriber, they know where to get it. It's in the product, but it's Linares@CoStar.com. I'm also on LinkedIn. Please, I'm always happy to connect on there as well. I also have a Twitter handle, Israel and ATX. That's IN and then ATX. So any one of those channels, happy to connect through that.
All right, sounds good. What and Israel, is there anything we didn't talk about that you just wanted to share? I just didn't ask anything that you're, wanted to share in words of wisdom. Really anything, man. Data or mindset or any other piece.
Yeah, I think. I feel like a cheerleader for Austin. Even though I'm not, no one's paying me to do that. I'm here to be an objective teller of what the data says and just relay that message. But I think Austin's got a lot going for it. Just I think we're seeing a lot of scary kind of things in the headlines that may say that we're in doomsday's coming, but Austin really is known as a city for attracting talent and attracting people in the creative sector and having sort of a vibrant entertainment scene, and I think that's all going to serve Austin in the long term. And I think that there's Austin's on a really good path, and so I'm excited to kind of continue to track progress and see how this all plays out for as it pertains to commercial real estate. And I think it's an exciting time in Austin. It's such a dynamic market, so I'm really excited to continue to tell the story of Austin.
Right on. Yeah. Well, that's good stuff. Well, thanks a lot, Israel. I really appreciate your time, and thanks for coming on the show.
Yeah, I'm happy to be here. Thanks so much again.
All right. Well, my name is Abel Pacheco. Thank you very much for joining. We appreciate it. We hope to see you on our next show. When you get a moment, go to the podcast review section. Hit one of those stars or all 5, depending on how you view the show. And please leave us a written review. We'd love any feedback that you have for us. And go ping Israel and go tell him thank you for showing up as well. So thank you very much. Talk to you soon. Thanks a lot, Israel.
No problem. Thanks so much, Abel.
All right. Bye-bye.